Good morning, everybody. Welcome to another Daily Mark Bar brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it's October 16th. Hope you guys having a great day today. We got a few things to go over today. We'll jump right into it. We'll start off with the retail sales for the month of September. August was a pretty good month. As you can see, month over month, it went up 0.6% August. Forecast for September was supposed to be a little bit more modest at 0.3%, and it actually contracted. Instead of going up, it went down. So it dropped 0.3% in September. Now, when you take up big ticket items like autos, that could sometimes skew the numbers. We had 0.2% increase in the month of August. Forecast is calling for that same trend of 0.2. However, it did also contract 0.1%. So obviously, very disappointing because of this number. A lot of the projections for the Fed to cut rates by quarter at the end of this month just went up to from 78% to 90% chance that the Fed will be cutting by the Fed funds rate by a quarter percent. So uh, again, the investors will be watching these numbers because from now until then, there's not a whole lot other data out there. And this is probably one of the last big ones that they'll see prior to their meeting. We got business inventories for the month of August. So in July, rather, it went up 0.3%. However, in August, basically remained nil. So no change in August. Now, here's an interesting one. Home Builders Index. This is the confidence for home builders. We did see an improvement. We did go up again from August to I'm sorry, from August to September, and then now from September to October, it went up to 71. So we're getting this is a 20-month high right here. So this is we're starting to see some improvement for home builders. Last but not least, later today, the Fed Beige Book will come out. This will give us more of a microeconomic view of the different areas of the U.S., giving us a view, see what kind of different industry sectors and stuff that are what's going on around the U.S. Like manufacturing's been one of the big questions of so far. This will give us an idea as to if it's just specific areas or nationally or where things are at. So this will give us a better view of what on a microeconomic viewpoint. So let's kind of jump ahead here to the headline news. Stock market is down. It's taking its cue mostly from the U.S. China Hong Kong protest. Now, what happened was yesterday the House of Representatives passed three bills that are pro-democracy in favor of the Hong Kong protest. China is a little upset with the U.S. feeling that we're interfering with their policies and their protests, or their with their with basically their domestic policies, and the U.S. is basically kind of taking a stance that this cannot go on. These people have the right to protest. Uh, One of the things that also is known is that China has, or pro, Hong Kong has special interests in the sense that they have special trade agreements with the U.S. And through that, China's been able to work its way through Hong Kong and be able to use those special interests into the U.S. And that's also another thing that we're kind of tapping into. So U.S. is kind of standing up to them, and a lot of the civil rights or civil uh, things are going on over there. So a lot of things going on over there, and China is threatening retaliation. So it'll be interesting to see if other countries around the world will also kind of join in or not. Now, also, there's possibly a new form of QE being placed by the Fed. The Fed kind of taking its cue. If you look at last month, the Bank of Japan kind of basically said this is what they're doing, is that our Fed is going to now start buying about $65 billion worth of short-term treasuries on a monthly basis. And what this will do is it'll help create liquidity in the marketplace because they were having some issues earlier on with some liquidity. But not only that is also to flatten out that yield curve we've been talking about. So this is supposed to help the yield curve improve a bit here. We do got a few Fed speakers out today, and later also throughout the day we will get some Q3 corporate earnings reports due. So we got a few already. There'll be some more after hours, but we're starting into that new corporate earnings reports that investors will be watching. And one of the big ones, of course, will be Netflix. They're interested in watching Netflix primarily because of all the new competition coming up. AMC just announced they're going to get into streaming. We've talked about Apple. We've talked about Disney, and all these other people are now jumping into the streaming platform. And of course, that's going to be more competition for uh, Disney. So, I'm sorry, for Netflix. So let's jump ahead, see how this is playing out in the bond market. Bond market is doing a little bit better. Yesterday we had a price change; it worsened a bit. We ended up closing down, I think, 14 basis points. And again, this 100-day moving average did help us. Today we did test, as you can see here. We're up currently about 11 basis points. Um, so we might get a little bit better pricing today, depending on how this if this keeps moving or not. So we're kind of in the middle around here. We got room for above and below us, and but right now we're about up 11 basis points. And again, we don't see a trend reversal yet. It's still a little bit of a gap between these two lines on this stochastic chart here. But let's take a look here in the bond market. I'm sorry, the treasury market. The same thing. We touched this Fibonacci level. It's been a pretty strong support for us. It's down only about 1 point, down to about 1.76 currently on the U.S. Treasury. So again, we'll have to kind of wait and see later on in the day if it kind of continues that trend, if it might improve a little bit more for us. But right now, I'm going to say go ahead and say rates will be a little bit better than what we left off yesterday. If you guys are looking, so that pretty much is a wrap. If you guys are looking to buy or refinance California, please reach out. If you want to support my being able to do these reports, I need to support my business. And best way to reach me is either direct message me or email me. I am a mortgage planner with Pinnacle Home Loans. We've helped many people with their refinances and purchases of homes, and we got a lot of different strategies we can utilize. We've also used the home mortgage for different things in helping you to improve your cash flow, to helping you to, for college planning, to go ahead and do stuff like retirement or trying to different strategies on how to pay off your mortgage sooner, to a lot of different things, but in any case, reach out if I can help you guys out. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.